All right, it's a little early. We're going to go ahead and start looking for some opportunities in the markets after this huge dip, looking like it's set for a comeback. There's all this tariff talk, and I think it's going to be um, not as bad as people are trying to point it out to be. Um, I'm just trying to map out some opportunities. I think I want to have one good play for today so I don't get labeled as a pattern day trader. Just trying to grow the account, trying to learn and teach at the same time, and look if there's some many opportunities to answer some questions or, um, you know, just uh, if you have any inquiries or anything about investing, I'll be able to help as a fixed income trader, as an equities trader, as a derivatives trader. Uh, I just want to have the opportunity to uh, help people on their own journey, their own investment journey. All right. So typically at this point in time, while you're investing or when you're getting started investing, some people like to continue to stay on the road or stay on that path they've been on. And putting in that certain amount, every week, every 2 weeks, every month, and just dollar cost average into these markets. And I'm sure that's going to get you a lot more um, of a share than several months ago because of the price. So when we're looking at the markets and we see this huge dip, it's down like 10%. And that's typically correction territory, 10%, 50 points from being in around excuse me, not 50 points, but 500 points, or, well, in this case, it is 50. Um, but with the Qs, it would be, let's see, historical average. I really say I think we're oversold in the Qs. Um, just looking at the max chart. Last time we had a crazy pullback was what, the 32%, 33% back from December of 2021 to December 2022. So during COVID, also peak. It was COVID 2020, March. All right. So I just see it as a buying opportunity now for a lot of people who want to get started in investing. For me, I'm looking at, and that's why I'm switching over to the screen. I'm just looking at an opportunity to buy an option, which is a bet on the stock market if it goes up or down. So when you're buying options, you have the opportunity to buy what's called a call, CALL, which means it's a bet the stock market's going to go up. And you also have an option to buy a put. Um, these are basics. And that's an option that is going to go, that's a bet that the stock market's going to go down. And that's how you buy a put option in order to bet on the stock market going down or to protect. There's a lot of different ways to use options. Typically, puts are utilized as protection against your stocks going down if you own them. So You buy 100 shares of stock, you buy one lot, which will cover those 100 shares. And then that way you'll be able to, uh, you'll guarantee your price or better for that option strike price minus whatever premium is paid, right? So, if you have 100 shares of NVIDIA, worth 115, 58, and you want to make sure they're protected against going down from here, then you would buy one option 115, right? Because you don't want them to cross that 115.58 wherever it is. But that's going to be an opportunity for you to just make some smart decisions on your money and um, protect what you've paid for and what you've bought, what you've earned to accumulate, right? Let's see. Today's a Friday. It is the second Friday of the month. It's not a typical closing day for options, but I do have some buying power, and hopefully I won't get marked as a pattern day trader. I'm just maybe seeing a bounce back in the markets after a brief, maybe gap down early during the day. You might see a small rally going into the weekend. There isn't any major news on the calendar, I don't believe, today. Consumer sentiment and inflation expectations. So nothing like the Fed speaking or opportunities like that. There will be um, some opportunities after 9 a.m. And who's to say that inflation expectations may be a little bit better than they actually thought? That may give you a little strength to the rally as well as consumer sentiment. If it stays the same, um, or it gets better, that's going to be a good thing for the markets. So you want to look at opportunities like that. What's going to go ahead and give you a little boost. But as a typical investor, long term, you still want a dollar cost average. You still want to, put a little bit more money if you can. I want to see some opportunities for me to hop in after there's just a gap down for the day. Just seeing that side from that trend line that we had earlier. All right, usually touches those bottoms. This is a usual rate. That was a Huge, huge warning. I wanted to see that. I thought it was going to zoom in for me. But just imagine, the opportunities that we may see when it gets back up to that point. The reason I traded Qs, I did trade SPY. I tried other individual stocks. I just enjoy the Qs so much more. It's volatile. It's composed of a lot of those high volatility tech names. And typically the SPY and the NASDAQ share a lot of the top holdings. So it was better for me to trade this one, I think. Better for my heart too. Trading the Qs are better for your heart. I still remember my first heart attack, or like mini heart attack. It was the Super Bowl where Atlanta blew like a 28-3 lead. Definitely remember that feeling. That was heartbreaking. That was like, yeah, still remember that feeling. Don't get it anymore though, but because my heart is now formed into a cocoon. No more sports teams. No more. All right. So I just have a feeling that after some initial pullback, there's going to be some strength and some breath in the market. We'll get the opportunity to probably break through. I mean, this is not financial advice, nor am I like a guru or a smart person or anything. Well, not like that, but like a fortune teller. I don't even know if I'm that smart, technically. Let's see. Over the rainbow. You can see 480. What is that right now? No. Yeah. 480 before the day's done. That would be a great bounce back. As long as we don't go downward, right? We see that double bounce prevalent here along this line, the 467 line, which is at support right now. The support's the bottom where it's supporting the resistance at the top. We're seeing that we're reaching resistance right now. If there's something to break us out of that, like some good news for customer inflation or consumer sentiment or inflation expectations, we may see a nice little jump after that 9 p.m. or excuse me 9 a.m. A report. So you got the opportunity to see where the market's going to go from here. It did do some capitulation, which means it tightened up and where it's trading at. And a lot of people, when it comes to that point, it's either going to go in a heavy level one way or the other. So take a look and see where it's going to be. Take a look in the sky. Mountaintop in the sky. Oh, what is it? Butterfly in the sky. I can go twice as high. Take a look. It's in a book. Reading Rainbow. Reading Rainbow. That's my shit. But, just the opportunity to see where it's at on higher volume. I like that right there. It was a nice range. It came back and it carried into the market close. A lot of times you'll see some weakness develop after the market closes. And that's just one of the days that we had. Right. So, you have that long range, the range of what the trade's at, where it opened, where it closed, the range of which it traded at, it's open, it's closed, and there was, just some tightness. It's not very much there, and that's not a very good sign when you don't see the momentum carry into trading day. It also points out that there's some weakness coming ahead. So there's an opportunity to interpret it on your own. This is no way financial advice. This is the way I interpret things. And it's sometimes it works, sometimes it doesn't. But there's a way to read the chart. We are going for that 480, or excuse me, not 480. That's a little bit too ambitious. Let's do a 478 if I can afford it. A couple of them. Oh, that's not bad. All right. And the price is going to decrease for today after the market opens. Oh no, it's going to increase. Right. Butterfly in the sky. Let's see the option chain. Take a look. It's another book. Reading Rainbow. Reading Rainbow. Butterfly in the sky. I can go twice high. Take a look, it's in a book. Reading Rainbow. Reading Rainbow. So just looking at the options chain here. Why isn't it showing more? I touched the wrong one. Here we go. In order for some strength to show itself, it would have to increase. The markets would have to increase on low volume. It couldn't be like large movements in volume for me. It just shows that somebody's trying to get in or get out relatively quickly. If I wanted to do something crazy, I would do a straddle. It sounds volatile as something with Microsoft. Okay. I think I figured out what I'm about to do. Okay.